The Monetary Policy Committee of the Bank of Ghana has kept its policy rate unchanged. It left the rate at 14.5%. And speaking at a virtual press conference, Governor of the Central Bank, Dr. Ernest Addison, cited growth concerns.
Growth downturn and higher inflation. All indicators of economic activity, international trade, construction, and manufacturing activities declined significantly. More granular data also show that business and consumer confidence and private sector credit growth, even though declined on a year-on-year basis, is beginning to show some modest gains. Policy and regulatory measures announced by the MPC in March and May have positioned the banking sector to withstand the shocks associated with the pandemic and to support businesses. These measures are working their way through the economy and are beginning to impact positively. So far, new advances for the first half of 2020 was estimated at 15.8 billion Ghana cedis compared to 12.1 billion in the same period last year. The central bank will continue to engage the banking industry to provide the necessary support in these challenging times. The committee noted that the COVID-19 pandemic has pushed public finances out of the path of fiscal consolidation. The fiscal deficit is expected to expand to 11.4% of GDP by close of the year. The huge financing gap brought about by the expanded deficit could exert pressure on debt with long-term implications for the economy. While government stimulus packages for various sectors of the economy, including micro, small, and medium-term enterprises, is in the right direction to boost economic activity, the committee's view was that going forward, the 2021 budget should be focused on instituting measures to return the fiscal consolidation path with a view to building resilience and strengthening the pillars of the economy for a return to stability. The Bank of Ghana's latest forecast shows that inflation is currently above its upper limit, driven mostly by food prices. Adjusting for the unusual noise in the food inflation, the indications are that underlying inflationary pressures are stable. The bank projects a return of inflation to the medium-term target band by the second quarter of 2021, conditional on corrective fiscal measures being introduced in the near term. The committee was of the view that the current extraordinary circumstances, with a widened budget deficit and residual financing gap, would require some monetary restraint to preserve the anchors of monetary and macroeconomic stability. In the circumstances, the committee decided to maintain the policy rate at 14.5%.
All right, so leader for the Financial Advisory Unit of Deloitte Ghana, Yaolati, joins me for some analysis on this. Yeah, great to have you on the program this afternoon. Were we expecting otherwise?
Well, thank you. So I think the business community were expecting some form of further reduction in the policy rate from what the previous reduction by about 150 basis points to 14.5% in March. So the business community were expecting some further reduction in order to stimulate economic growth. As you recall, the reason why the Bank of Ghana reduced the policy rate in March to 14.5% from about 16% was because of the effect of the pandemic on businesses. So the idea behind the reduction is to allow banks to lend at a much more concessionary rate or interest rates that businesses could afford. And so given that the pandemic is still raging around and affecting a lot of businesses, the business community were expecting a further reduction in the policy rate.
Yes, the business community, they were expecting a reduction, but that is not so. The governor is citing good concerns. What do you think is going through the minds of the members of the committee in deciding whether or not to adjust or maintain this rate? And as we have seen, they have maintained the rate.
Yeah, so I think maintaining the rate is maybe the best out of the lot, the option that we have at the moment. It could have been better. Maybe a further reduction would have been the best for businesses. But given the current situation and the reasons cited by the governor of the Bank of Ghana, which I agreed largely, because the budget deficit is widening, and you also do not want a situation where further reduction in the interest rate also affect other sectors of the economy, particularly the real sector. So it's a point where government is trying to, or the Bank of Ghana is trying to use monetary policy to support the fiscal side of the economy. So if that's the case, then you don't want to overly reduce the interest rate to a level where it also affects the fiscal side of the economy.
Right. And the committee was also supposed to discuss the impact of COVID-19 on the banking sector. Later on, we'll be hearing bits of what the governor had to say about the absorbing the shocks of COVID-19. But from where you are, what has been your impression or your analysis of how the pandemic has affected the banking sector?
Good. So I think the pandemic has affected the banking sector in a number of ways. And the first one being credits that has been advanced to a sector that have been hardest hit by the pandemic. So a lot of banks have had to restructure and even further advance facilities to some sectors that have been hardest hit by the COVID. So we've mentioned in the past or previously the hotel or hospitality industry as a whole, aviation, oil and gas, and the likes. If you look at the sectorial exposure of banks to these sectors that we've mentioned, you realize that there is huge exposure to the sectors that have been hardest hit by COVID. If that is the case, then one of the ways that banks will have to manage is to support these sectors or restructure facilities in the sector. And there is a risk of default of loan facilities in the sector that have been hardest hit. If banks are heavily exposed to these sectors, 30%, about 40% of sectors or of exposure to the sectors are commerce and industry, manufacturing, and all the other sectors that we've mentioned that have been hardest hit by the COVID. Then banks have also stand a risk of defaulting or of loan default by companies that operate in the sector that they've advanced loans to.
All right. Yeah.
Beyond that,
okay, just conclude. Sir.
Beyond that, I think the banks have had issues with cash flows as well. As you know, the Bank of Ghana had to reduce the primary reserve requirement for banks to be able to give a lot more credit to the private sector. But the reduction, as you recall, was from 10% to 8%.
Right.
That's 2 percentage points. And so that also brought some relief to the banking sector. But I guess the risk of default is very high on banks, which is something that they are having to grapple with.
I appreciate your thoughts this afternoon. You're Latte with Deloitte Ghana. We appreciate that you could speak with us.